Hello everyone. In case you don't know, this is a daily view of the S&P 500. As you know, we've had just an amazing run up in the market from this October low. In fact, as of Monday, we only had 2 down days out of 19 trading days, so 17 up days, 2 down days. That was a condition that, as of Monday, had only occurred 3 times in the past 50 years, going back to 1971. So finally today, we did get a reversion to mean pullback. We're still above the 9 EMA. Is that it? Is the pullback going to continue? How deep will it go? Also, Tesla down 12% today. As you know, it was very overextended. Big pullback. Could you have foretold this? Where's it going to go? Big hint, there's an open gap here at 910 and a big support at 900. I will answer this and a lot more in this video update. So let's get started here. First off, my name is Matthew Frailey with BreakpointTrades.com. I founded it in 2003. We've been providing advanced technical analysis, market commentary, trade ideas, and advanced mechanical systems. And we've been doing that for individual traders and investors and institutions, and since 2003. Okay, so let's get right back at it. First off, the last video I posted on YouTube was on Sunday, but remember, we have a newsletter website service. We post newsletters every day of the week except Friday and Saturday. So I posted a newsletter update on Monday, but on the weekend for YouTube, some of the last discussion you saw was one of the things I discussed was this statistic that I saw in a Zero Hedge article. And I'll go ahead and pull that up. So here's that Zero Hedge article, and that was from last week on Thursday. You can see the table here, and I'll provide a link in the video description. But in this video, they showed this statistic that, actually this was from last Friday, I'm sorry about that. So it said the S&P 500 had only been down 2 of the last 18 trading days in the past 20 years. Okay? It only occurred 1 time, precisely 0. Well, I saw that on Friday. That piqued my interest. I'm a statistics guy. I'm a former chemist, so I like numbers and statistics. That's what drew me to technical analysis. Anyway, this is that table. You can see their stat table going back to 2000. And when I see something like this, what I want to do is verify the stats. I don't like taking anything on face value. And so what I did on Monday, I wrote a strategy for Tradestation to test this, backtest this, and also test it further back. They just went back to 2000. So I wrote a strategy to test this all the way back as far as I want. So we'll discuss that. But clearly, as of Friday, and I discussed this on the weekend, the market was quite stretched in the short term, statistically due for some sort of reversion to mean pullback. And then on my Monday newsletter to our subscribers, this is the table of contents from the newsletter on Monday. And you can see one of my comments here. It says, slight update for the market. However, take note, 2 down days in 19. We are likely due for some sort of reversion to mean pullback. So the market was actually up slightly on Monday, and so that stat got stretched even further, and that's why I put out that warning alert to our subscribers. Well, as you know, then what happened? Then today we had a nice pullback in the morning. Obviously, we came off those lows, but still a nice pullback. Again, the progression starts here on the S&P. This is day 1. As of Monday, you had 19 trading days here. Only 2 of them were down, this one and this one. And when I back tested that on my program, going back 50 years, that instance only occurred 3 times. So So very rare condition. The question now is, how deep will this pullback be? Where might it end? And I'll give you some thoughts on that. Here's the slide I provided to my subscribers on Monday evening. So you can see here it talks about, there's the S&P. As of Monday's close, again, you had 19 trading bars in here with only 2 down days. And I talk about it here, how this only occurred 3 times, including Monday, over the last 50 years. Here's the examples with my back test. Once in 1995, once in 2013, and of course once on Monday, November 8th. So what I did is I wrote a program for Tradestation to backtest this or any other sequence. And I'm going to show you that in a minute for those of you who might be interested in doing something on your own. Plus, guys, anyone who subscribes to Breakpoint Trades at a new membership, a 6-month membership, if you have Tradestation, I will give you this strategy that I wrote so that you can test on your own. Before I get to that, again, market having a little weakness this time of year does make sense. Here's these seasonality tables, and these are from various sources. You can see I have 3 of them. One goes back, say, 20 years. One goes back all the way 1928. This one goes back to 59 years. And they all show that November is one of the, typically the second strongest month of the year, but they all show that you typically have some weakness or consolidation right around mid-November, highlighted in yellow here. Okay. And then the green area shows you the end of November, where you typically have your end of November rally into Thanksgiving. All right. So let's go ahead and move to Tradestation. So here's a daily view of the S&P. Here's the strategy that I wrote. And again, I'm willing to share this strategy with anyone who signs up to Breakpoint Trades or who is a member currently of Breakpoint Trades. So here's the settings. What's nice about having a strategy like this is I can backtest. Okay. So this would be the number of bars, number of days, and the number of down bars in that progression. So 19 versus 2. Again, what's nice about a program like Tradestation, I can backtest it. So I can say I could backtest anywhere from 17 to 30 or 50. I can backtest any progression here. Now, for any strategy, you need an entry, which right now this would be my condition. If I have a progression of 19 trading days and only 2 of them were down, the rest of them were up, that generates a short. But I need a condition to cover that short. So right here, I can use a condition to cover that short, which is on a close back below a moving average, for example. Here I have the 20. So let's go ahead and, for example, backtest it. We'll backtest the 5 SMA to the 20 SMA. So what that means is it's going to test all conditions of the market pulling back below the 5 SMA to the 20. We're going to do this, hit optimize. There's only 16 parameters to run, so it's very quick. Let's view the back-tested results. Optimization report. So if you take a look at this, you can see there's only, again, 2 total trades. There's 1 current open trade. And this is your intraday drawdown. I have the trade entry set to $100,000. That makes the stats easy. So $543 would be 0.5% drawdown. And you can see this would be your 5-day moving average, your 6, 7, 8, 9, 10, all the way up to your 20. Now, if you look here, right about on the 13 moving average, and you skip up to the 14 moving average, your drawdown increases a bit, and then it increases up to the 18 and 20-day moving averages. Okay. If you wanted to be super safe, you could just have the strategy exit on a simple close, say below the 5 SMA, which even with today's pullback on Tuesday, we still didn't get that. Just for simplicity, let's go ahead and select the 10-day moving average. Okay. And we're going to make this 10-day moving average. So more than likely, the market will, over the next few days or week, will likely have a close below this 10-day moving average. Or if you wanted to be really conservative, you could say use a 8-day moving average. The statistics are basically the same for both. 10-day and 8-day, essentially the same, very close. So that's what I'm looking for on this correction. What I'm not looking for, guys, is a major market sell-off. Okay, so I realize this is getting a little academic, a little eggheadish, but I'm not looking for a major pullback. The market's clearly in a very strong uptrend. Okay, but what I am looking for is a reversion to mean type pullback, which started today, something like that, a close below the short-term moving average. Then I think we'll get our typical rally in the later part of November, typical, Thanksgiving. All right. But that's what's cool about Tradestation. Or being able to write your own strategy. Whenever you see a statistic like this, you could say, well, let me test that on my own, see if it's accurate, and I can also test more than their parameters. They only test back to 2000. Well, I could say I can test all the way as far back as I want. As you can see here, I have 50 years back, and I could put more in there if I want. Also, just for fun, let's do another condition, guys. So it's really it's versatile because I could say, well, what about over the last 30 days, what was the least number of down days in that? So let's test it. Just test this from 1 to 10. Back test. All right, so if you look at here, over a 30-day progression, number 6 here is the first time you get a trade. There's 2 trades in the last 50 years. So over a progression of 30 days, 6 down days was the least number you had. You didn't have any instances of 5, 4, 3, 2, 1. And so you can see my point. You can test anything you want. Let's test, for example, what about if we wanted to test over the last 60 days? What's the least number of down days in a 60-day progression over the last 50 years? Right here, 17. That's your first set. And then 16 would be 16 and below, notice there's no trades. So over a progression of 60 trading days, 60 trading bars, you never had an instance in the last 50 years where you had only 16 or fewer down days. So you see how that could be useful. In the future, when you have 60 trading days, if you notice that it's a very strong rally, and you notice, for example, there's only 15 or 14, you're at a record statistical situation and likely due for some sort of pullback. Again, I know that's pretty academic, maybe getting a little boring, but I just wanted to give you guys a deep dive of things I look for and neat things you can do with these statistics. So let's go ahead and get back to the general market. Again, before I mention that, if you are not a subscriber to Breakpoint Trades, if you subscribe to our 6-month service, and if you have Tradestation, I'll freely give you this strategy. Okay. But again, that's really not a reason to subscribe. The reason to subscribe to us is because of our professional analysis and trade ideas, which have been just absolutely phenomenal. So let's go ahead and get back to the market newsletter here. Here's the index sector table, what transpired on Tuesday. You can see down day for the market, and it did erase Monday's slight gains. Here's the moves on the sectors. There's the dollar, which is down for the week so far. Crypto has had a good week, obviously, though off the highs a little bit today. Commodities, overall decent, but big sell-off in natural gas. Precious metals, gold, up 0.5%, silver down 0.5%. GDX, the miners, continue to outperform. Remember, last week I pointed out a low-risk trade opportunity in the precious metal stock area. And today on Tuesday, we had the CPI, inflation coming in hotter than expected, not surprising. And let's go ahead and move on. So let's go and get back to the market. Here's the daily view of the S&P. So like I said, since this day here, this is October 13th, I think, up till Monday, we had 19 trading days. Only 2 of them were down. Like I said, we only had 2 instances prior to this back to 50 years. Okay, so likely the S&P, in my opinion, by the way, on my charts, the daily charts, the magenta on our charts is the 9 EMA. That's your short-term support. And then the 20 SMA, and then, of course, the 50 in red. The green moving averages are your 200-day moving averages. These are our moving average ribbons. We use RSI, MACD, volume, and some other indicators. But anyway, I think the S&P is likely to at least undercut the 9 EMA sometime during this reversion to mean pullback. Maybe even get down to its 20-day if it loses the 9 EMA. Obviously, this is your big support. Like I said, I'm not looking for some major market crash, guys. We're clearly in an uptrend. When you ever have a strong move like this, you typically don't form major tops there. But, you could have some sort of ABC type pullback. And then I think we rally up again, typical late November, Thanksgiving, etc. So I think at minimum we're due for some sort of correction down below the 9 EMA here. Okay. Here's a 2-hour time frame. Little pullback here. Horizontal lines here. These are the big supports. So you got a big support right around here, 46, say 30, and of course 45, 45. The September highs. If the market really wanted to pull back, I kind of doubt we're going to get down to there on this correction, honestly. But that is a big support below here should that fail. Here's a 15-minute chart. I showed this on Monday, this tight coil, which broke to the downside Monday morning. You can see we did bounce off the Monday lows. Could we rally up to new highs from here? We could. I think that's unlikely at this point. I think we still come lower. These are your next support areas right here, 46.64. This is your 20-day moving average, and then of course down here, 46.35. All these are support areas down here. Here's the 60-minute chart of the S&P. Again, these are your major support areas down here. Moving on, here's the Nasdaq, same deal. Notice we had 2 doji candlesticks. Okay, we had a black candle on Friday and a black candle inside day on Monday. Whenever you see these black candles, just the black candles alone are usually pretty indicative of some sort of pullback. You can see back here, you had a black candle. Usually they're very good about these black candles about incurring near inflection areas. Okay. I didn't know why I didn't point it out, but the S&P had the same thing, which on the weekend I talked about that doji candlestick shooting star. You had another tighter doji on Monday, so everything was set up there. So easy short trigger as well would have been simply shorting the low of that doji from Monday. All right, so NASDAQ, nice little pullback. Again, this is your first support. Remember, technical analysis, This was previous resistance back here, became support. This was resistance and September high. That is now major support. Again, I kind of doubt we get down here, but should the 9 EMA fail and it wanted to come down here, this would likely be bought. Triple Qs, basically the same deal. Again, look how you had that perfect black candle on Friday and a doji on Monday. So things were really set up for a pullback. I do think, again, we're going to probably undercut this 9 EMA on this reversion to mean pullback before it's over. Here's the 60-minute chart. Here's a 15-minute chart that I showed on Monday to my subscribers. It had a head and shoulder, slanted head and shoulder look, not a textbook one, but really it looked bearish. We broke that right away on Tuesday morning, but we were up on Tuesday morning. So subscribers to Breakpoint Trades, the S&P and Qs were up in the morning on Tuesday. You actually did have a chance to short, guys, before the sell-off. So I gave everyone early warning on Monday and on Tuesday morning. So anyway, we broke this. And notice here, this is really an area of little support, quite honestly. There's really not a lot of support till you get down here about the 390 area. There's also a little open gap right here, which it looks like that may have been filled or tagged. Not quite, but it got pretty close to it. So again, this is an area of little support. I think we could work down into this area over time. Let's move on. Here's IWM small caps. Again, they've had a really nice breakout. They were in this long consolidation for quite a while, pulling back. Again, healthy pullback. Volume was really good. No MACD divergence whatsoever. No RSI divergence. You know, just overbought. So again, this is an eventual buy on a pullback. Especially if you get some sort of ABC, that'll definitely be a good buying opportunity for that index. Moving on to some of these indicators, the VIX. So the VIX had a perfect double bottom late last week, which we pointed out to our subscribers. On Wednesday, I talked about it on the weekend, and on Monday, you can see this nice perfect double bottom bounce. The VIX had also become uncorrelated with the market. Take a look at the correlation indicator down here. And that occurred as of Monday. Whenever this spikes uncorrelated to the S&P, you generally get some sort of correction. The reason why it became uncorrelated is because the S&P was going up while the VIX was going up. And as you know, that's pretty rare. Here's a nice indicator, the VVIX. It had closed above the VOMA 110 line on Friday. And of course, again on Monday, and that was a nice early warning. These are all the instances in the past. Again, sometimes you only get a day pullback, but sometimes you get a much better pullback. It's been a very good indicator guide. Something that we've shown here for the last year. Moving on, high yield corporate, they still look okay. They're pulling back a little from this double top, but it's still healthy looking. I think it forms a higher low here and eventually pushes higher. TLT 20-year bonds simply had this ABC type correction. Took out this resistance recently. So long-term rates are going down. Moving on to just a few sectors, not going to cover many. The transports, nothing new here. I talked about how they were up at this resistance, and this is a likely area to pull back, maybe form some sort of handle. You could see this potential cup and handle here and then break out. Financials still in this little channel flag type pattern, no changes there. Semiconductors, crazy overbought. Look how far extended. Whenever you get something that extended away from its 9 EMA, remember that's your mean, you're due for some sort of consolidation. We got a little bit today, but it really needs more. Hell of a rally. This is a good buy opportunity off this 200-day. And take a look at the black candle right there. And it'd be in a nice low. XOY, consumer discretionary, big pullback. Again, this was due. I talked about the moving average ribbon being super wide, the negative RSI divergence. You get a spinning top doji here. Very big separation between that and the 9. And look at this nice pullback. Was way overdue. Moving to commodities, DBC, commodity index, ETF. Had a bullish look here, starting to move up. Looks bullish, doesn't it, guys? Commodities are in a bull market. Inflation is here. Crude oil. Nice rally. This is your big support. We didn't quite make it to there. It looks like it wants to rally up again, maybe to another high. Natural gas. Lately, it had been rallying off the 50-day moving average. Tested it the third time, but once it started failing here, to me, it looked vulnerable to break, and that's what happened today. It broke down. There is a big support down here, which you could see right here around 420. That could be an eventual target over time. Cryptocurrencies, you know, Bitcoin, ABC correction, another big rally. But one thing to point out, there is some MACD divergence setting up now. All right. So it's not as low risk trade as it was. Remember, guys, in uptrends, buy ABC zigzag corrections. Those are your low risk trade opportunities. All right. Right now we have a little divergence setting up. Ethereum continues nice rally out of this cup and handle. One thing I pointed out the other day was Bitcoin Cash. It's been lagging, but it had a beautiful tight coil setup. Nice rally the last couple days, playing some catch up. You can see your moving average ribbon was pinched nicely. Whenever the moving average ribbon pinches, your energy is pent up. Some of the crypto stocks, you know, they've been on fire, like Mara, one of our favorites. Off the highs today, black candle. Bitcoin ETF, Bitcoin Trust, GBTC. Riots kind of came back. It was lagging, but it's had a nice rally this week. Moving on, currencies, US dollar down today. Nothing changed, guys. Still the same technical pattern. Main support, main resistance. Ping pong in between them. Gold broke this coil the other day. It's moved higher. You do have a resistance here. That's your resistance. I want to see the stocks continue to lead. That's the GDX-GLD ratio. When we look at the weekly chart, I'm not going to show the monthly chart. This is your major downtrend line resistance. We really need to take this out. But every other commodity has done very well this year. I do think gold will have its day. Okay. And so I think gold could be set up for a decent 2022 rally. But we'll see. But we need to clear this downtrend line. Silver, you have an inverse head and shoulder pattern potential. And as I've been stating, you could be long silver. Your swing stop would be this higher low initially. Moving to the stocks, GDX, the gold miners ETF, same thing. We pointed out this low risk buy opportunity last week to our subscribers. You had a higher low here, potential inverse head and shoulder pattern. That's where your swing stop would be, right here. But again, the entry was last week, guys. But you have this potential. GDXJ, another gold stock ETF. This is the juniors, similar pattern. If you want silver exposure, SILJ, similar pattern as well. SIL, silver miners ETF, same pattern. Higher low, that's your stop. That's your neckline resistance. Some individual stocks, FNV, one of the major ones, Franco-Nevada, has the same pattern. I'd like to see it clear this area, but I do own a little bit right now with a swing stop. USAS, there's a tiny one I mentioned the other day. It's been moving up nicely. EXK, it's a little silver stock, kind of a complex inverse head and shoulder pattern here. It's got to clear this area. And SVM, another one. All right, guys, let's move on. So Tesla, you Tesla fans out there, big correction today, down 12%. All right. So could you have predicted a pullback here? It was definitely overdue. Again, guys, everyone knew that. First off, we had divergence here set up in the RSI. Your moving average ribbon was wickedly wide. We had our trusty black candle. You see that right there. We had no MACD divergence, but typically on these parabolic moves like this, you will not have MACD divergence. Oops. But you could usually have some sort of divergence in a, say, a 5 RSI or a CCI indicator. which I have down here. But anyway, everything was set up here for a pullback. If you notice, there's a big open gap down here. This open gap is at 910, and then of course you have the January high at 900. So to me, this would be a target over time. If it does bounce here, notice this is we sliced right through the 9 EMA today. We went to the 20. Generally, when you slice the 9 EMA, you go to your 20. It's that simple. If we do bounce here, I think we form a lower high, wave B, and then come down again in a C. And then this would be a good buy opportunity. That's if we bounce here. We could just go straight down, perhaps. So, but if we do bounce, I'm looking for a lower high and down again. I think this gap is going to be a magnet. All right. Now, here's a 60-minute chart. And this is something I pointed out to our subscribers on Monday. First off, you could see these recent coils, which broke to the upside. Momentum was waning here. You could see the while you didn't have MACD divergence on the daily, you had it on the 60-minute. All right. You had it on the RSI as well. But if you didn't pick this high, your big warning, guys, your shot across the bow was on Monday. We had that big pullback on Monday morning. Here's your key, symmetry break. We had a 111-point pullback from the high here. From this high to this low, that's 111 points. You could run it to 110, whatever. But that was the largest pullback in the uptrend that began back there. So that began all the way back here. That was the largest pullback. Whenever you break symmetry, you almost always form a lower high, and that's what happened right here. We formed a lower high. So whenever you break symmetry, we pointed this out on Monday. The thing to do was exit later that Monday on that bounce. And then, of course, it had the big sell-off today. So symmetry is a very powerful tool. It's something I will do a separate video on one of these days. This shows my scenario where if we bounced from here, lower high, down again. But you can see this open gap here at 910. That is likely a magnet going to be filled. Okay. So my recent ideas, gel. We've been knocking out of the park. This is an idea from last week. Broke out on Monday. Big move on Tuesday. We like these coil patterns. It was brilliantly set up. Great trade. CPE was another one from the weekend. Nice move the last couple days, cup and handle. CPE on the weekly. These could be potential targets over time. The 70 area and then 85 to 95. You know, LCID was a monster trade of ours out of this long base, volume expansion. This was a long idea back in October. So brilliant move from the 2750 area. AMD, my pet stock. This was a long idea back in April. Look at this, or early October. Look at this move from the falling wedge pattern. Very extended now, but you bought it here. 50% move in essentially a month. Unbelievable. NVIDIA, same deal. Coil pattern was set up. Boom. Straight up, though, was time to take some profits today. You know, AMAT, awesome trade through this trend line resistance. Costco, awesome trade through the coil. Anyway, guys, that does it. We'll see what happens on Wednesday, November 10th, and, of course, the rest of the week. Again, my name is Matthew Frailey with Breakpoint Trades. Thank you for following us on our YouTube channel, and consider subscribing to us if you haven't done so. Take care.